Good evening, everyone. Welcome to tonight's webinar on how dentists can receive money from ERTC and receive full PPP forgiveness. My name is Amanda O'Brien. I will be your moderator this evening. A few housekeeping notes before we begin. If you have any questions, please utilize the Q&A function within Zoom so we can keep track of who is asking what question. And if we don't get to your question tonight, that way we can reach you via email. Your video and audio are muted, so if you have any technical issues during the presentation, please utilize the chat function. Tonight's presentation is also being recorded and these slides will be sent out to you guys later this week. And with that, I'm going to turn our time over to Art, Megan, and Jim.
Hello, everyone, and good Wednesday evening. Welcome to the third of our year-long The Business of Dentistry seminars. It's great to have you with us. There is a ton of stuff going on. I can't even begin to tell. Well, I will begin to tell you for the next 2 hours. We're gonna help increase the federal deficit. That's what we're gonna do. We're gonna try and get you guys away to, Megan says, stop it. I don't want to do that. That's not very nice. Okay, we're going to get you guys some tax credits and PPP forgiveness. And that's what we're going to talk about tonight. But first, I want to just, again, share with you that we're doing this as part of a 12-part year-long series that is a partnership with 6 local dental societies here in Southern California. And I want to mention them by name and talk about their executive directors. So we have the San Gabriel Valley Dental Society's executive director, Leah Dishian, the Los Angeles Dental Society, Greg Orloff, Kurt Thornton from the San Fernando Valley Dental Society, Megan Francis from the Orange County Dental Society, Michelle Schneider from the West Los Angeles Dental Society, and Kristen Avina from the Harbor Dental Society. Thanks to all of you and all your wonderful society and the members for participating in this series. And so, like I say, tonight is the third of a dozen of those. On Wednesday night next week, we're going to be doing another webinar on due diligence for buyers and sellers, particularly buyers of dental practices, and that'll be with my good friend Kathleen Johnson. So tonight we have 3 presenters. Myself, my name is Art Wiederman. I am the director of dental practices here at the CPA firm of Eide Bailly. I'm very excited. I've been, my CPA firm is, we merged in with Eide Bailly about 9 months ago. Very excited to be part of Eide Bailly. I have my good friend and colleague, who I guess I've already made angry because I want to raise the federal deficit. So I won't say that again, I promise. Miss Megan Mortimer, who is a congressional lobbyist for the American Dental Association. Hi, Megan. She's waving. And I have my other good friend whose name is Jim Donovan. Jim is a partner here at Eide Bailly. And Jim is our firm spokesperson. He's in our national tax office. He comes to us from Iowa. And Jim is our firm expert lead person in the firm on the employee retention tax credit. Hi, Jim. Wave. Good. So we'll be hearing from these guys as we go along here. So I've got some things to share with you. Number one, I'd love for you to listen to my podcast. I do a weekly podcast called The Art of Dental Finance and Management. The one that came out today is all about how to use LinkedIn in your dental practice with a LinkedIn expert. Next week, we're going to record similar information of what you're going to hear tonight on the podcast. Please tell all your friends about it. We got some great podcasts and guests coming up. Another thing I want to share is, I also, before I get going, I want to thank the amazing, not great, amazing team here at Eide Bailly. Amanda O'Brien, who is our basically keeping me in line tonight. Rachel Mitchell, who puts together the unbelievably beautiful PowerPoints. If you guys think I could do this, you're crazy. And then Jessica Grobel, who's the head of our medical dental team out of Minnesota. I could not do this without you guys, and I just want to thank you from the bottom of my heart for everything you've done to help us and all of our dentists. So let's go. So Amanda, are you going to give me control here, or how are we going to do this? Not sure.
Let's get to the point where I need to share the Excel and that article.
Okay, sounds good.
And then after that, I'll give it over to you.
So I want to give you guys our standard disclaimer and the rules of the road for this webinar. We got a lot of information, but I'll read this. The information on this webinar is provided solely for general educational purposes only and does not create a binding business or professional services relationship because business practice, business trends, technology, and governing laws and regulation vary by location. Compliance with such standards depend on each individual particular situation. You should really consult your personal financial advisor before making any decisions based on the information we provide to you tonight. We're going to be going through a lot of stuff. We're going to talk about the 103 pages of guidance that came out on the ERTC on March 1st. There are literally hundreds of technical rules that interplay here. We're not going to get to every one of them. We'll do our best to answer your questions. And what we're going to share with you tonight, guys, is a great opportunity if you qualify to put tens of thousands of dollars in your pocket. There are lots of twists and turns. The government is going to be watching how this program comes out. They're going to be looking for abuses and stuff like that. I'm not suggesting that anybody's going to do that. You really need on this one to work with somebody who understands these rules, whether it's us or your CPA or somebody else. Get some professional help if you're going to go down this road to try and get this credit, get your SBA forgiveness. Okay, Amanda, let's go to the next slide. So this is kind of our agenda for tonight. We're going to start off. I'm going to let Megan give you all of her legislative updates and from my favorite congressional lobbyist and the only one that I happen to know. She'll kind of give you some real updates. The House of Representatives passed a pretty big bill today. She'll tell you about that. We'll give you a little history about how we came to this point, kind of how the forgiveness works, because we're getting to the point, folks, where by July or August, you're going to need to be filing for forgiveness on your PPP round 1 loan. And then in December, the $900 billion stimulus program that changed everything. And then we'll talk about the PPP round 2 rules. The new rules for the sole proprietors and independent contractors. That came up. Amanda, were we going to put up that article right now? Is that what we talked about for that we came out with, I think, today? Yeah, so if you guys want the latest information, Eide Bailey is, I mean, when things come out, they have within hours, they have articles out. Jim has written articles. This one happens to be by our lead PPP partner in our principal in our National Tax Office, a gentleman by the name of Adam Sweet. So Adam wrote this article, and we're going to talk a little bit about this later. But for those of you who are sole proprietors and independent contractors, the rules for applying for PPP 2 loans have changed dramatically. Happened last week. And this article will explain it. We'll chat a little bit about it on this broadcast. So, and Amanda was nice enough. Just go ahead. She put the link up to this article, and you can leave that up there for a minute. Okay, Amanda. Let's go back to the agenda. Yeah. Then we're going to do a really deep dive into the ERTC. And then how we get the PPP forgiveness and how it interacts with the ERTC, and why we've been talking about not filing for forgiveness yet, and then the documentation you need. So one thing I do want to get to before we get into our topic tonight is we have more alphabet soup that we're dealing with, which is many of you applied for and received funds from the Department of Health and Human Services HHS Provider Relief Fund. And Amanda, if you want to go ahead and put up our spreadsheet. So the Provider Relief Fund, many of you received 2% of your revenues back in August. Many of you applied for the phase 3 payments, and in December and January received many of you, 6 figures or more in monies, and you are going to have to report. You're going to have to report this information to the Department of Health and Human Services. They set up a portal on January 15th. They had originally intended that everybody report their 2020 results by February 15th. However, didn't quite get there, Megan, right? So, you know, so they didn't get there. So you can go and register on the portal, but you cannot put your reporting information in. Eide Bailly has created a PRF reporting tool, which if you want to go ahead and email me, Amanda, you want to put my email up in the chat? We'll get you a copy of this. This is a tool. It's not the be all and end all to get you every step that you have to be on this, but this will help you gather what we believe is going to be the information that you're going to need to report on this. And I'll let Megan in her update kind of tell you they've been talking to HHS. So this is our reporting tool, and it's got several things at the bottom that you can link to and things like that. So just be aware that that's a tool that we at Eide Bailly are making available to our clients and other dentists that are out there who might need that help. But you are going to ultimately need to report on this. Okay, let's go, Amanda, back to the agenda. I think we're done with that, and then we'll get into our topic.
Just give me 1 second. I'm just updating that chat with your email.
Okay, thank you. Yeah, and the HHS, there's a lot of information, folks, that you're going to need to provide to the government. And by the way, this is kind of like you file it like a tax return. You send in the information and you hope and pray that they don't audit you and they don't come and ask you questions. And that's what you need to do. And so there you go. So without further ado, my favorite congressional lobbyist, Miss Megan Mortimer, who has been at my side for a year now. I met Megan in probably April of 2020, and she has been beyond invaluable in working with the American Dental. She's a lobbyist, one of 4 congressional lobbyists for the American Dental Association. I will tell you folks, the ADA is fighting for you every single day. It blows my mind, the things that these folks have done and gotten accomplished with Congress. And Megan has a direct pipeline to the different agencies. She has been assigned the wonderful task of being the lead person at ADA on the PPP, the Paycheck Protection Program. Are you now the ERTS person too, Megan?
Yes, sir. ERTC is mine. I am tax all the way as well.
There you go. So tax and all this stuff. So Megan, I will turn the stage over to you. Why don't you kind of share with everybody what's going on in Washington, what's going on with all this stuff, and what is ADA working on? It's all yours.
Well, I remember us talking, I think it was 2 weeks ago, when you were asking me when this bill was going to pass. And I said to you, if it doesn't pass by our March 10th webinar, which is the most important webinar to both of us coming up, we would both be tearing our hair out. So I think someone smiled down upon us today because it passed the House today and will be signed down into law on Friday. I'm not going to get into the nitty gritty of there's a lot of stuff in this bill. There's stuff to state governments. There's, extension of certain or expansion of other tax credits. But in terms of PPP, not a whole lot changed. They put additional like $7 billion into the program and kind of expanded it to certain nonprofits that weren't eligible before. And then in terms of ERTC, the biggest takeaway is that they extended your ability to use ERTC, not just the first 2 quarters of 2021, but extended it through December 31st, 2021. So you might be able to take advantage of ERTC in all 4 quarters of 2021 as well. Beyond that, the only other tax revision that I do want to mention that didn't get a lot of fanfare is there is a student loan tax credit involved in this bill that was intended for if any sort of blanket forgiveness was done by the Biden administration. We've heard about, the 10,000, the 50,000, whatever number you're talking about. They did put something in this bill that would ensure that if you did get student loan forgiveness in any sort of COVID relief or for the next 5 years, any canceled debt by the federal government would now not be considered taxable income. So that's kind of huge for anyone that's been in a student loan repayment, income-based repayment plan. And if your income-based repayment plan matures in the next 5 years, you won't have to pay an income tax on whatever forgivable or leftover canceled debt you may have. Now, a lot of that is more applicable to our new dentists, but the 20 to 25 year loan maturity for the income repayment plan may be applicable to some of the people that are on this call. So I just want people to pay attention to that moving forward as well. And then moving forward, now that we've gotten the American Rescue Plan done, we do know that there's a lot of emphasis on doing another sort of relief package, but also we're shifting to other things. There's going to be a look at the Affordable Care Act, making tweaks to that. Expansion. I just want to mention things that may be effective or affecting dentistry specifically. There's going to be discussions about Medicaid. There's going to be discussions about expansion of Medicare. So all of that stuff will be going on in the next 6 months or so. And in about the summertime, we're going to start seeing a lot of really big proposals like come to fruition and see where they actually can go. In the tax space, they're also going to be taking a look back at the Tax Cut and Jobs Act from 2017, which although feels like 15 years ago was really only 4, at least it feels like it was 15 years ago to me. So questions like making the pass-through provisions that were created by the Tax Cuts and Jobs Act permanent is something that's going to be discussed. We want to make sure at the ADA that they do not exclude dentists like they tried to in the initial iteration of the Tax Cuts and Jobs Act, that we had to fight to make sure dentists were included in being able to take care of the pass-through provision. Protecting cash accounting, ensuring, Section 179 expensing, all that stuff that the Tax Cuts and Jobs Act kind of expanded or, kind of enhanced that is beneficial to dentistry. We at the ADA will continue to fight for that. We are also, much to Art's kind of consternation in ADCPA, because it might add another layer of complexity, fighting to ensure that the Provider Relief Fund, so the HHS, Department of HHS Provider Relief Fund that Art just mentioned and put up that kind of spreadsheet worksheet for, would not also be included in taxable income. So we are fighting on that. The bill is going to be introduced in the next couple of weeks. We continue to work on a PPE tax credit of up to $10,000 for small businesses. It may be up to $25,000 for small businesses, depending on which proposal moves forward. So I'm really just trying to add more to Jim and Art's plate going forward, because that I relish in that. But that's pretty much kind of the snapshot, I think, from the dental profession perspective of what might be coming down the pike in the coming months, either in terms of business issues or healthcare related issues. And if anyone has specific questions on that, they can let me know. The other one thing I wanted to caveat is, one, this tax season is crazy. So please give your accountants and financial advisors a break. They have exponentially more work to do than they ever did before. And we at the ADA, in the small way that I dip my toe into trying to provide any sort of tax advice or PPP advice on ERTC, I'm barely touching it. We will be doing a Q&A with Alan Schiff, who's the president of the ADCPA, in the ADA News this week. That's a top level of ERTC, but really don't ask the ADA specific ERTC questions, because it's going to be all Jim is going to know. It's an individualized basis. You really need to talk to your financial advisor. I can guide you through PPP as much as I can, but ERTC is much more nuanced. And we are dealing with agency situations in which we're going through a transition. So I know we're all frustrated that the Provider Relief Fund portal has not opened up to begin reporting. Everyone wants to get that off their plate. But we have gone from one administration to another. We're still confirming people in top positions. They have to hire people, onboard them, and make sure they do their jobs correctly. So these agencies are going to take a little bit longer than they had previously thought in order to get these programs underway and to ensure that the flow of filing for forgiveness and all of that in the SBA, looking to Treasury and IRS to maybe extend the tax deadline to July. We're pushing for that. We're pushing for a PPP extension through the end of the year so that we don't have to cut it off on March 31st. But we just also need to be patient with the agencies right now. I know that's difficult, but we didn't need to give a little leeway. Some of them don't even have their bosses in place yet. So I'll stop there. And Art or Jim, if you have any questions for me, let me know. Otherwise, I will leave it to you.
No, we'll chime in. Megan, thank you. And again, it is such a blessing for myself and the folks at Ide Bailey and Alan Schiff, the president of our ADCPA, to have such a wonderful resource. And Megan, because we're constantly emailing and texting questions back, and we have to find out about this and find out about that. So it's absolutely wonderful. So definitely stay tuned to what we're talking about. So All right, let's get into our topic tonight. Amanda, let's go to the next slide, and we can try. My button stuck the last time, but are you turning it? Have you turned this over to me, Amanda?
Yep, give it like 15 seconds and then it's all
Okay,
yours.
well, great. Well, I'll start talking. So a little bit of history. So let's go back about 1 year ago in 2 weeks, 50 weeks ago, March 27th, the CARES Act, a $3.2 billion stimulus package, which I believe was passed unanimously, if I remember correctly, by both the House and the Senate. I don't think anybody voted against it, if I remember correctly, or very few did. That created the Paycheck Protection Program, which we will call PPP, and the Employee Retention Tax Credit, which is the ERTC. They put $349 billion into the PPP program. It came out in early April in 2020, and that money was gone in 14 days. They replenished it with another $310 billion, and about $120 billion of that was not borrowed. The ERTC was there. I actually talked to a client about it in the middle of the year, but we decided that the PPP was a much better deal. You were not allowed to get to apply for the Employee Retention Tax Credit back in 2020 if you had taken out a PPP loan. So I didn't even pay attention to this. And then when this law passed that we're going to talk about here, Megan calls me up, she says, you're going to learn about this ERTC thing, right, Art? And I said, yep. And I said, you are too. And boy, have we done that. That's what we're going to talk a great deal, and why I am very thankful that my friend Jim is here, because he is as much of an expert on it as anybody I know. So, they wanted Congress wanted you to spend the money in 8 weeks. They didn't want you to put people on unemployment. A lot of people went on unemployment, whether the business was open or not. And, basically on June 5th, Congress finally listened to Megan and all the other lobbyists and all the other people in the business community who said, wait a minute, if you give me money for 8 weeks and my business is not open, it doesn't help me one bit in surviving. So they expanded to 24 weeks. Okay, let's see if we can do this here. Now, Amanda, it is not moving here. You may have to take back over. It is, yeah, I cannot advance this.
Okay, 1 second. Let me pull
I'm
it
so
back.
sorry.
No, you're fine.
Yeah, it's just my button is not working. Yeah, it did last week. It did not this week. So basically, just for the round one of so we'll say round one and round two. So for round one, you guys, for the most part, are going to take 24 weeks. There is very, very few reasons, unless you actually sold your practice, that you would cut this down from under 24 weeks. So in order to keep this money as a non-taxable loan that you do not have to pay back, you have to do the following. You have to have spent 60% of the money, which was reduced from 75% originally, on payroll. And that's payroll for your employees. And for 24 weeks, you got to spend up to $20,833 for yourself as the owner. And the other 40% had to be spent on rent, utilities, and interest. They've added several categories to that, retroactive back to 2020, which we'll talk about here, and notably PPE. And Megan and her friends at the ADA advocated for that very strongly, and they got it. You had to keep the same number of full-time employees, although you really didn't, because of a special rule they put in. And the biggest thing was you had to basically not fire a bunch of people. If you maintained employee salaries, hourly wage, and you didn't reduce their salaries or hourly wage by more than 25%, you were fine. I don't know one dentist, and I talk to hundreds and hundreds of dentists every month, and I lecture to them on these webinars. I don't know anybody who basically said, okay, you're making $25 an hour, front office person, you're now making 22. I don't know anybody that did that. And SBA provided a really, really nice present to everybody who got these loans, and simplified the forgiveness process for anybody who got a loan of less than $150,000. If you are having serious trouble sleeping, and you go on to the web and you go on to treasury.gov and you go to government programs, there must be at least 100 different entries for the different forms and the different interim guidance and everything that has been there for the last year. But that's how that works. Okay, let's go next slide, please. So this is the number one, very important, guys, and I want you to pull out a pencil and a piece of paper. This is what you need to do. Put this on your calendar. So step one, tomorrow morning, go to your bank, go to your accounting records, go to your bank statements, figure out the day that your PPP round one money came into your bank account, the day that it hit your bank account. Now, I don't know anybody who got more than one payment, but most people got it all in one shot. And most of you, they opened up the program, I believe it was on the 4th or the 5th of April. Most of you received your money anywhere between the 15th of April and about the 30th of May. That sound about right, Megan? Yeah.
Yep.
So find out the date that you got your money, okay? Then add 24 weeks to that. And that is the end of your covered period. That is the time that you need to have spent all of this money. And then add to that date, 24 weeks in the future, 10 months. And that is the time you must file for forgiveness. So let's go to the next slide because I have an actual example that'll help you understand how this works. So Dr. Wiederman got his PPP loan deposited into his bank account on May 7th of 2020. 24 weeks later, just go right down your iPhone calendar, is October 22nd. So that means that I have 10 months to file for SBA PPP forgiveness. And I have to file no later than August 22nd, or what happens? It turns into a 1% loan, either for 2 years or 5 years, depending on when you got the loan. So folks, put this on your calendar. Now, I will tell you that we CPAs, I don't think that we are going to be calling every single client and say, okay, Dr. Smith, your PPP loan, your forgiveness is coming up here. You need to do this. So put this on your calendar. We're talking about July or August for most of you that this needs to get done by. Okay, next slide. So, and then in December, they changed everything. As you remember, in late December, Congress passed the bill. The president waited about a week to sign it, but he finally signed it. It was a $900 billion stimulus bill, and it did a whole bunch of things, but it did the following for this subject matter. It created another $284.5 billion for round two of the PPP. A huge, huge thing that we have been talking about is it changed the law, because what had happened was that the IRS said, wait a minute, we're going to give you guys free money that you don't have to pay back, right? And you want to write it off too? No, that's not happening on my watch. So the IRS came out with a ruling that said, if you have a reasonable expectation of forgiveness of your loan, you basically, can't deduct these expenses. Okay. Well, that all changed on December 27th when retroactive back to 2020. And Megan, please feel free to chime in at any point here. Now you are allowed for 2020 to deduct the expenses. So if you got a $150,000 PPP loan and you use that money for payroll and rent and utilities and interest and all the new things they've allowed, not only do you get to keep that money and not pay it back if you meet the program rules, but you also get to be able to write it off. It is an absolute windfall for small business owners who desperately needed it.
Yeah,
So,
I mean, it was the right thing to do, right? The intent of Congress, and we've heard this from many congressional members, leadership who wrote this bill, the intent of Congress was to always allow you to deduct your expenses that you paid for with PPP. It was the IRS and Treasury that decided to take it upon themselves to reinterpret the, congressional mandate essentially that they had put forward in this bill and made their own decision. And it took a real concerted effort, but it was a huge joint effort by so many different business groups, small business groups in DC, to ensure that if IRS wasn't going to overturn this themselves, that Congress would force them to. And so that happened in this bill. We were really happy to see that.
Right. Now, for those of you, there are people who are not in California listening to this webinar, but most of you are here in California. There is a bill, Assembly Bill AB 80, which has been in the state assembly and running around the state senate now for weeks and weeks and weeks. The state of California approved some aid to California small businesses, $25,000 grants. And what we were hearing was, oh, well, next week, Governor Newsom is going to sign the bill, and they're going to allow small business owners to deduct up to $150,000 of PPP expenses. So in Jim's and my world, we have companies that we contract with to give us up-to-the-date training. I mean, iBailey does a lot of its own training, but there's companies out there. And in California, there's a company called Spidell Publishing. And Spidell is the authority on California law. In other words, when the state writes a law, Spidell will send them an email and say, no, this is wrong, you need to fix it, and they fix it. Spidell sent us an email today that basically said AB 80 is nowhere to be found. It is nowhere near passage. And therefore, you know, at the moment, while all of your PPP expenses are deductible on your 2020 tax return, for your California tax returns, at the moment, they are not deductible. So your CPA, Jim and I, and all the other folks that do this work are, at the moment, if you do a California return, you have to add back, if you got just for this example, $150,000 PPP loan, you have to add back, and we deduct it on your federal return. We have to add it back on your state return. Most of you are going to be in a 9.3% bracket. So at the moment, that's about, what's that, about $13,000 of additional tax, which is one of many, 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 many reasons that you should be extending your tax returns. And we have clients, and I'm sure all CPAs do, who are just adamant, nope, I don't care, I'm going to file anyway. If you file your returns, now for those of you who are S corporations or partnerships or LLCs out of California, because dentists are not allowed to be LLCs in California, your tax returns are due in 5 days. They are due on the 15th. And actually, let's see, that would be Monday. So we would strongly urge you to consider extending your returns so that you don't have to amend them and incur an additional cost to do that. So California is not conforming to the December 27th law allowing deductibility of that. Okay, and this is what this webinar is primarily about here. The new law allows dentists who took out PPP loans in 2020 and in 2021 to, if you took a PPP loan, you also now can take advantage of the employee retention tax credit. So there you go. Let's keep going, Amanda. So just real quickly going through to qualify for this loan, the PPP2 round, you have to have applied for and received a PPP round 1 loan. If you did not, you can apply for, in essence, a brand new PPP loan. There's no requirement to get a loan that you applied back in 2020, but some of you might have not. But if you want to do it now, you can. You have to have used the funds from round 1 in full for the CARES Act. Can we go back one, Amanda? Basically, you have to have had 300 or fewer employees to do this, and that's for, that's not going to apply to most of you. This is the big rule. You have to have experienced at least a 25% reduction in gross receipts in any calendar quarter, which for most all of you is going to be the second quarter, because that's when we shut down. And here's the big deal. You have until March 31st to apply. Now, if you have not applied for your PPP2 loan yet, we are hearing from the banks that I got an email from one of the major banks in California that said If you do not apply by March 17th, we're not going to have enough time to package this all up and send it off to the SBA. So many of the banks are cutting this off early. So I would not expect, if I were you guys, to be able to get on the phone, call your bank, get on the portal on March 31st and apply for a loan. It may be too late by that time. Yeah, Megan?
So a couple of things on PPP2. We are advocating for a few changes to PPP2. First and foremost is to change this rule from calendar quarter to any 3-month consecutive time period. So what we're finding is a lot of our dental practices, saw the downturn, 3 consecutive months in a row, but they just don't happen to be a strict calendar quarter. We reached out to SBA about this and Treasury to see if they could do something on the regulatory side. They say, no, their hands are tied. It's in statute. So we are asking Congress to make this change. So that's one good thing. But I always want people to be aware that right now it's strict calendar quarter. We've had some lenders who are allowing people to apply using just a 3-month period. And the problem is that once they go to file for forgiveness, the likelihood is that they will be rejected because it's not a strict calendar quarter if we can't make this change. We also want to extend the period to be able to apply for a PPP beyond March 31st. There's still money left in there. They just opened up to a bunch of new different nonprofits. They need to give businesses time to be able to apply for this if they want to. And hopefully that will make the lenders less gun shy and they won't cut off their application dates as a result.
Yeah.
We also want PPP Draw 2 to be available to startup dental practices. As you know, if you weren't in business before February 15th, 2020, you aren't able to apply for PPP second draw loans or even first draw loans. And we think that's unfair. A number of dental practices decided to open up in February. And in some cases, these dental practices are worse off than those have been around forever because they just started their patient load trying to attract patients, just hired a bunch of new employees, and then all of a sudden had to shut down. So I just want you all on this call to know that that's what the ADA continues to fight for in terms of PPP round 2.
Yeah, that's exactly right. Let's go to the next slide. So this 25% test, you have to have a reduction of 25%, and as Megan said, it is a calendar quarter. It is not, you can't just pick 3 months where you had a 25% reduction. Sorry, they're advocating for it. We're fighting for it. Whether they'll change it remains to be seen. So it's basically all your gross receipts, including rents, royalties, fees, commissions. If you sold baseball cards, that's included too. Everything that's included in there and is reported on your IRS tax forms. We talked about calendar quarter. If you apply for a loan of greater than $150,000, you will have to show your calculation of the revenues for whichever quarter you pick in 2020 versus 2019. If you apply for a loan of less than, I'm sorry, that should say less than $150,000, you don't need to show your calculations when you apply, but you will need to show how you came to your 25% reduction when you do ultimately file for forgiveness. Okay, let's go to the next slide. And the rules are pretty much the same, Megan, as I understand it. I mean, we have to use 60% of the funds for payroll costs. They did add some additional insurances that you can use the money for. I think it's dental, vision, health, life, disability. Again, you've got to use the money, the 60%, but it's the same drill as last time. You basically are taking 2.5 times your average monthly payroll costs, and they're giving you 5.5 months to spend the money. You can also choose, I didn't mention, a period anywhere between 8 and 24 weeks. So, I mean, let's say if all of your employees are going to quit on week 15, you can cut off on week 15. Not going to happen, but there might be some isolated reasons, but most all of you are going to use 24 weeks. We're still waiting for guidance. I mean, they want you to pay employees, to continue to employ employees, and to not cut their salaries. But I think we're going to get some more guidance on PPP2 down the road, I would think, Megan, maybe?
I mean, we're going to have to. I assume the forgiveness rules will be almost the exact same and everything will be in place, but they are just going to have to put out some guidance to lenders to ensuring they're processing it correctly. And so we all are assured that it'll be the same letle of rules as it was for PPP1. The
Okay.
one thing they did change, remember, in December was that you can use PPP money for PPE now, which you weren't able to do previously.
we
So that's
got
one
some.
more operating expense that people should be thinking about in terms of their PPP loans.
Yeah, we've got some slides that are going to cover that. All right, next slide, please. So these are all of the, there you go. Okay, so in this new law, as Megan was saying, they've added a bunch of things. Because remember, you got to spend 60% of the money on payroll. The other 40% you can spend on other items. And these are the other items: mortgage interest, rent obligations. And by the way, if you want to do rent, if you own your own building, there's special rules on that you are limited to the amount of interest you paid on a loan for a building. So if you own a building free and clear and you are leasing it to your S corporation, don't believe you can use your rent expense on this. Utilities, which covers a whole bunch of things. Those first three expenses were part of the CARES Act. So you were always able to use those for expenses for the 40%. But they added a whole bunch of new ones, which opens this thing up to a lot, and you're going to need it, as we're going to see shortly. Covered operations expenses, software and online things, human resource expenses. Next slide, Amanda, please. Item E is probably not going to affect you unless there was a riot in your town and they burned your dental office down. Property damage, we sadly saw in many big cities, people went on the rampage and broke into businesses and did destruction to them. Well, that's covered. Supplier costs. I mean, we read this, dental supplies. I mean, it says made to a supplier of goods that are essential to the operation. Well, what dental supplies do you buy are not essential to your operations, right? So dental supplies, we think, there hasn't been much guidance. I was looking all over the place, and there hasn't been much guidance on these rules. And number G is the one Megan was talking about, which is covered worker protection expenditures, operating or capital expenditures, which is basically PPE. And let's go to the next slide. And this gives a whole list of things. I don't think any of you have drive-through dental services, but if you did, you could include them. Air pressure, ventilation, filtration systems, you all have those. Physical barriers, they say a sneeze guard, I say the plexiglass screen in your reception area. And, basically anything that you have that basically represents money that you're using for PPE and things that you put in for COVID are probably going to qualify under the 40% rule. Next slide, please. So how do you figure this out? Basically, how do you compute your maximum second draw loan? So there's a link that I put in here. They give you, on this January 19th document, interim guidance on how to calculate your second round, how to calculate the 25% reduction in revenues, and how to compute your maximum second draw loan. When we started this wonderful journey, Megan and I and the rest of the world back in April, nobody understood. How did you do this for a partnership? Did you include the partners in the calculation? Did you include S corporation shareholders? Well, what they did this time around, because they learned, is they put together this document, and it said, for this type of an entity, this is how you calculate your second round loan. For independent contractors and sole proprietors, which, as we told you at the beginning, those rules changed as of last week. We'll get to that in a second. S corporations, partnerships. So that document is a step-by-step document to show you exactly how to compute your loan. So on March 3rd, they came out with these new rules. And again, there's the link to the second draw for Schedule Cs. What they were finding was that for independent contractors and Schedule C doctors who had losses or very little income, they were getting very little of their loan, because say you had a dental practice that grossed $400,000 on Schedule C and you netted $30,000 for whatever reason. You got a very, very small PPP loan. Well, now you can use your gross revenues. I'm not going to get into all the calculations tonight, but you can use your gross revenues from 2020 or 2019 to calculate your PPP loan. Unfortunately, if you already applied for your PPP loan as a sole proprietor or independent contractor and used the net profit, Megan, I do not believe there's a mechanism to go back. You are out of luck, folks. Are you guys, I heard, did you tell me that they're talking about changing that, or that not really at the moment?
There's discussions, but it's not a heated discussion right now. But I think since the American Rescue Plan passed, we may have some more bandwidth for it coming forward in the next couple of weeks, but it'd have to be fast.
Yeah, it would have to be. Okay, so next slide, please. All right, Mr. Donovan, it's time to take yourself off of mute, and you're up here. So again, I want to introduce my good friend, Jim Donovan. Jim is go back, Amanda.
One more.
Back one more, please. So Jim, tell the folks on this webinar a little bit about yourself and what you do for us at Eide Bailly.
Absolutely. Well, thank you, Art. So I'm a partner in our national tax office. Most of the time, I'm focused on different credits and incentives, and the majority of those are R&D tax credits. But when the ERTC came out last March, we threw ourselves at it, and it was a fun area of the law we got to start playing in. And then, gosh, when the law passed in December, my life got really busy.
So it did.
Yeah. But I've been with Eide Bailly for about 5 years now, and it's been a fun ride.
So you are in charge. You are the firm's spokesperson for ERTC, and in fact, you are folks. If you don't get enough of this tonight, Jim, you and Adam are doing this again tomorrow, right?
We are. We're talking PPP and ERTC tomorrow at 11:30 Central Time, I believe. So don't miss out.
Again, if you guys want the link and you want to listen again to minds that are much smarter than mine, feel free to email me. So Jim, and they passed this law in December, right? Yep. And we were saying, oh, that's great. Now we can use the ERTC, but how do we do this? And we were, how many times, Jim, did you say to a client, we're waiting for guidance? How many times?
Probably just short of 1 million.
1 million. You needed your calculator to figure that out.
Yeah.
Well, on Monday, March 1st, we got our wish, Jim. We got 103 pages of guidance through notice 2021-20. There's the link to it if you want to read it. Jim, how many times have you read that document? I've read it 3 times. How many times have you read it?
I was going to say 3 to 4. Yeah.
Yeah. And so why don't you kind of basically, we're kind of given an overview here of how our dentists can qualify. There's really 2 main things, right?
Absolutely. So in terms of qualifying for the ERTC, there's a bright line test, or at least I view it as a bright line test. That's a significant decline in gross receipts. And I'll be honest, for 2020, it's a really high hurdle. It's a greater than 50% reduction in gross receipts in a calendar quarter versus 2019 for that same calendar quarter. And so, like Art mentioned earlier, right, Q2 was probably the hardest hit, even though I would argue that, gosh, really the 3-month period is probably March through May for dentists, especially in California. So again, it's a really tough test to meet. The alternative test is a suspension, or whether it's full or partial, of operations due to a government order. And so I know a lot of you experienced that, right? So basically you had a local or a state order that basically came out and said, hey, guess what? You guys can't perform normal operations. And maybe it was for a short period of time, but the fact that you were suspended for that period of time, you would qualify for the ERC while the order was in effect, if that makes sense.
Well, we're gonna do a deep dive into all of this. So let's go to the next slide and start diving.
All right.
Amanda, can we go to the next slide? Thank you. Okay, so let's start with the 50% test. Again, for most of you who, again, most dental offices in the United States, 90+% of them shut down between April and started March 16th, and most dental offices in California and the United States were opening up anywhere between May 15th and June 8th, pretty much. So 8 to 12 weeks. So basically, the way this works, guys, and you got to read this, if you want to read law, I mean, you got to read it over and over, right, Jim? I mean, until you want to throw up, right?
A little bit,
basically, yeah. Basically, the way it works is that if you qualify, if you have a 50% reduction, which many of our folks do, okay? Many of our folks did have a 50% reduction in Q2. I'm going to say 30 to 50% or more of my clients did. If you meet the test for the second quarter, you automatically get the third quarter because you stop qualifying, Jim, and correct me if I'm wrong, once your business has a less than 20% reduction next quarter. So we're going to give you a little mathematical example here. So if you qualify for Q2, you automatically qualify for Q3. Most of you probably won't qualify for Q4. So in this one, I picked a random dentist that I know, Dr. Mortimer, who's not only a prominent dentist, but a congressional lobbyist in the Washington, D.C. area. You hated that, right? That was terrible, wasn't it?
No, I loved it because remember I told you I felt left out because you used to use Scott Haberman and I felt left out. That's
right. Okay. Well, now you're part of it. So Megan is not only a talented lobbyist, but she's also a prominent dentist in the Washington, D.C. area where she lives. So her practice had the following income. Second quarter, 100,000 in the second quarter of 2020 versus 210 in the second quarter of 2019. Well, for that, and then for the third quarter, she had 190 and 230. The bottom line is in the second quarter, comparing 2019 to 2020, Dr. Mortimer had a 53% reduction in her revenue. So Jim, she hits the bonus round, right?
She absolutely does. And why is that important? Because you get to take the ERC on wages paid for the entire quarter. So when we talked about the suspension of operations, you could only take it during the period that the government order was in effect, suspending your operations. But if you meet the gross receipts test, you qualify for the entire amount of Q2 as well as the entire amount of Q3. So it's really a much better answer, and it's a black and white test too.
So, and as you're going to see, so let's go to the next slide, Amanda. So for the third quarter, again, they were down, but then the second quarter, so we get to the third quarter, revenues were basically 82.6% in the third quarter of 2020 versus 2019. So what that means is Dr. Mortimer will not qualify for the fourth quarter wages. But to be honest with you folks, if you qualify for 2 quarters of wages, you're going to probably get to $10,000 in wages for your employees. So basically, there are special rules for dentists who started or bought their practices in 2019 or 2020. Again, we gave you the link, notice 2021-20. In fact, Amanda, I don't know if you can hear me. Can you just write notice 21-20 in the chat and leave it up for a little bit? Because they want to look at questions 27 and 28. If you bought a practice in 2020 and you have access to the seller's information for 2019, you are going to be eligible for this, because if you can get the right, Jim, if we can look at the prior business information from the prior owner, and if you bought a business, you probably did due diligence on that business, which included you getting copies of these tax returns, so you probably have it. Right? So
absolutely. Yep.
Yeah. So basically, what does this mean? Okay. Means for most of you, if you had the 50% or greater reduction, you're going to qualify for the second and third quarter because of the pent-up demand that you all have basically for the pent up demand that you had in the third quarter when you came back and everybody was waiting to come back into your office. You're probably not going to qualify for the fourth quarter, but who knows? Maybe you do. Maybe you were down 30% in the fourth quarter. Then you would qualify. I mean, in the third quarter, maybe you were down by 30%, then you would qualify for the fourth quarter. But the maximum is basically $10,000. So let's go to the next slide and we'll get into some of the numbers. We'll keep telling the story here, folks. Okay, now government order. Jim, I think there's 20 pages out of the 103 pages talks about what a government order is. And we've got an actual example of it on the next page. But basically, it has to be an actual government order and not a recommendation. So I want to be very clear. It was the American Dental Association and the Centers for Disease Control that came out and said, hey, guys, ladies and gentlemen, because of the fact that we don't know the effect of aerosols and what goes on in the dental office on how it would affect the spread of the COVID-19 virus in March and April, we strongly, strongly recommend that you shut your dental offices. And 90+% of the dentists in the United States did that. Did the state of California do it? Well, now remember, folks, it has to be an actual order. The order's got to say something to the effect of, we order dentists to shut down except for emergency procedures, or we order you to shut down, period. I have read Governor Newsom's March 19th stay-at-home order, and you're going to see something in the next slide, which will bring this home. Governor Newsom's order then basically gives the authority to the California Department of Public Health. And I've got letters from the California Department of Public Health that talk about, was there a shutdown? Was there a required shutdown? I have not seen a required shutdown. I am actually working with CDA and with one of my good friends, Aliyah Ramshian, who's talking to CDA about, can we find out what counties were shut down? There were some counties in Northern California that had orders. I thought I saw something for the city of San Francisco that had an order. What you need, so basically, I am not prepared at this moment to say, Jim, that the state of California has given an order to shut down. I am not prepared to say that Los Angeles or Orange County are. Will we change our minds? Maybe, but I have not seen anything. Now, there are many states, Jim, that you've dealt with. In fact, I know that Andrew on our team and a couple other folks, I think they pulled some orders from, I think it was Colorado and New York, was it?
Correct.
So you've seen orders that would make dentists shut down, right?
Absolutely. So it depends on the state, right? And this is what surprises me so much about California is it's been a very restrictive state for the most part, but for some reason they've overlooked the dental practices in terms of issuing that order that's shutting them down.
And there's another rule for the government shutdown, Jim, that talks about if they shut your suppliers down, right?
That's correct. So the example they put in there is, to me, it's kind of bright line, right? It's a fairly basic example, and certainly it's tough to apply that to different or more complex fact patterns, right? But the reality is, if you have certain materials that you need to do your job and your supplier can't provide those due to the fact that they're shut down, then you're in fact shut down. So, I don't know, if you need all your filling material, right, and your suppliers can't provide that to you, then you could potentially meet the government order shutdown.
Now, Jim, I want to just make sure we're clear here. I don't think the suppliers were shut down. Okay, they were still open. They just couldn't get the inventory of PPE delivered to the dentists. So that doesn't constitute a shutdown of your supplier. That just constitutes that your supplier couldn't fill your order. But if the state of California shut down all of the manufacturing plants for you know, for gloves, or for impression material, or for, you know, masks and stuff. That did not happen. In fact, everybody was trying to ramp it up because they knew what the need was. So that is the problem. Let's go to the next slide. So this is the one down here that is basically question 10 verbatim out of this notice. It basically, so what's an order from appropriate government authority? And look at what I underlined near the bottom. It says declaration of a state of emergency, because the governor definitely declared a state of emergency, and the governor definitely said you must go and shelter in place unless you are one of 16 essential businesses by government authority. Declaration of state of emergency is not sufficient to rise to the level of a government order if it doesn't limit commerce, travel, or group meetings in any manner. So you're going to say, wait a minute, what are you talking about, Art and Jim? It did limit my commerce. I couldn't do business. I had to socially distance. But look at the next sentence. Further, such a declaration that limits commerce, travel, or group meetings, but does so in a manner that doesn't relate to suspension of employees' operations. So the whole key here on the government order, Jim, is it's got to say you are suspended. And it can be a partial suspension, right?
It can. So a reduction of hours is something that we can hang our hat on to qualify, but a voluntary closure doesn't qualify.
Yeah. So this is the problem, and I know that Megan has. We've talked about that she's going to talk to Treasury. I think, Megan, didn't you say that you were going to maybe try and address this?
Yeah, we have a couple of asks, but this is the main one. Personally, at the ADA and other organizations think that the CDC guidance should be enough. If the leading health authority in the United States tells health practitioners how to handle their businesses, and that included shutting down everything but emergency dental services, we feel that should be enough. So we are going to be reaching out to Treasury and IRS to see if maybe they can change the definition of government order to include the federal guidance from the CDC.
I mean, Megan, it would not be in the public's good and well-being for dental offices to have stayed open, right?
Well, no, I mean, at that point, it was such a new thing, and we, both to protect patients, but also to protect the dentists and their staff, we had no way of knowing, how this was transmitted at first. We didn't know what PPE would be required. So at that point, I mean, as everyone recalls, it was the wild, wild west, and it would have been very unsafe for dental practices to just operate in the same way they had before. Right. So this is why we will push to see if we can just use the CDC guidance as enough to cover for the ERTC.
All right. So, again, what you guys, let's go to the next slide. So before we go on to how do you calculate the credit amount, Jim, I think the best thing that we can tell everybody is, and by the way, folks, I learned from you as much as I would like to hope that you learn from me. If any of you find something that says that the state of California or any of your counties has shut you down either in whole or in part, and by the way, they define, Jim, in part that if the part of your business that's shut down is more than, what is it, 10%?
Yeah, that's the quote unquote nominal.
Right. Well, if they shut you down, guys, they shut you down for non-emergency procedures, which is more like 90% of what you do. If any of you find anything, please email it to me, because I'm constantly looking. I know our team at Bailey is always looking for things like this. And I know that we're talking to CDA about it. So, all right, Jim. So how do we calculate this credit, right? It's 50% of qualifying wages, right?
Yep.
So what are qualifying wages?
Excellent question, Art. So qualified wages are basically wages subject to Social Security tax for you and your employees. And then we can also pull in qualified health plan expenses. So for the most part, if you offer a health plan to your employees, we can pick up the pre-tax contribution that the employees make, as well as that employer portion that you pay. And then, if it's self-insured, basically we can look at those costs as well and allocate those on a pro rata basis per employee. So that helps you get to your 10K a little bit quicker, given that we can pull those costs in.
Now, I do want to make a note that I'm going to guess that the vast majority of the folks that are on this call or on this webinar have less than 100 employees. There may be people on this call who own multiple offices, who run dental service organizations, DSOs. If you have over 100 employees, you are only allowed to, for 2020, 2021 will change, and we'll get to that in a minute. But for 2020, you're only allowed to take the wages, Jim, as I understand it, that are paid to employees who were paid, but who were not working. Is that correct?
That's correct. So it creates a bit of a challenge, right? If you have hourly employees, gosh, you know what, you're probably out of luck. But for those that, had some, if you're over that 100 employee threshold, right, you really need to identify what percentage of time they weren't working, and then you can pick up the wages and health plan expenses for that percentage of time. So it certainly takes a hit to your credit. The other thing to note on under 100 employees, right, is everybody qualifies. When you're over 100 employees, you also have to look at things like there's a 30-day test. So basically, if you can't ramp up somebody's wages, basically to increase your credit. So there's some nuances to the law when you're over 100 employees. It makes it just more challenging.
Most of the folks on this call are under, and it's pages 24 to 44. And I read that once. I did not read it again because there's not enough time in my life to do that. Next slide, please. Okay, so just as Jim, just talking about what group health plans are. If you don't pay employees, you can still count their health insurance, right? Even if we're not working for you.
Correct. So furloughed employees, certainly something you look at with over 100 employees because they were, I guess, low-hanging fruit, right? So, but yeah, absolutely. If you furloughed employees, we can pull in those healthcare costs, even though you weren't paying them wages for the ERTC.
I mean, for the most part, it's the pre-tax health insurance, and then whatever you're paying out of your pocket for your employees. All right, next slide, Amanda. So here's just some basic examples of how you calculate the credit. This is straight from the notice. So Dr. A is an eligible employer, pays $10,000 in wages in the second quarter. 50% of that under the new math, Jim, is $5,000, right?
Yep.
Pretty easy. Now, what happens if employer C only pays $8,000 in the second quarter? They get $4,000 in the second quarter, and then they look at the third quarter wages, and they paid, if they paid at least $2,000 in the third quarter, then they get to the $10,000. So if you don't get it in the second quarter, you're probably going to get it in the third. If you don't pay an employee $10,000 in the second and third, whatever you pay them times 50%, that's what they get, right?
Yep, you got it.
Okay, so let's go to the next slide. All right, so now we're going to get into what you've all come here to hear. How do we get this money, and how do we get forgiveness, and how do we do this? So if you read that first paragraph, I've read it about 18 times. Your head starts to hurt. So I'm not even going to read it. I'm not going to try and make you understand it. At the end of the day, Jim, what this says is that if we have to kind of bifurcate this into folks that have filed for forgiveness and folks that have not filed. And I have been harping, as have you, to clients and on the webinars that you've done, that this is why we didn't want anybody to file for SBA forgiveness, because we were afraid that this was going to happen. So the bottom line is, if you have filed for forgiveness, we're going to cover this first. For the vast majority of you who have not, we're going to show you how this works. So basically, let's go to the next slide. So interaction here, what do we do? This is for dentists who have filed. In the notice, there's 7 examples of the interaction, right, Jim?
Yeah.
And if you filed for forgiveness, basically, and you only put down wages, and you didn't limit the wages to 60% of the loan amount, and you didn't put in non-payroll costs, you have, to use the term, that you have shot yourself in the proverbial foot. Unfortunately, you will not get as big of an ERTC as we would hope. And Jim, there's no do-overs, right?
Nope, there's no way to amend that forgiveness application.
Yeah. So let's go to the next couple. Let's go to the next slide, and we'll kind of show you how this works. And again, this is right from example 2 of the 7 examples. So Dr. Donovan got a PPP loan of $200,000, and he paid qualifying wages during the 2nd and 3rd quarters that would qualify for ERTC of $250. So on his application, all he did was put down $200 of wages, didn't limit it to 60%, and didn't put down any of the rent or utilities or interest or PPE or any of that stuff. And because of the fact that basically, if you put down $200,000 in wages, Jim, you qualify for forgiveness, right?
Yep, absolutely.
Okay, so let's go to the next slide. So basically what this says is that because you put down the 200, you are, how does it work, Jim? You're electing not to use that 200 for the ERTC? Explain how that works.
Yeah, so in the December law, basically there was this weird language in there that said, effectively, ERTC comes first, and you have to elect out of ERTC to take it towards PPP. And so effectively what they're doing here is saying, well, gosh, if you took it for PPP forgiveness, it's deemed that you made that election, you're not taking it for ERTC, right? So that's basically, kind of what the language says here in short form.
So in this example, what happened is Dr. Donovan got a $200,000 loan. He paid $250,000 in qualifying wages, but because he put down $200,000, he only gets to use $50,000 of wages. Everything he did not claim, because once he claimed it on his forgiveness form, he's basically said, I don't want to use it for the ERTC, right?
Yep.
So he gets it on 50 grand.
Yeah, and I'll make a point here that I know there's probably some members of the audience that are outraged right now because you may have even put other kinds of costs in your forgiveness application. And the bank sent it back to you and said, hey, I don't want to have to check all this stuff, just put in wages. And the AICPA recognized that. They really pressed the point of, hey, we should be able to effectively do over that application, but the IRS and Treasury didn't feel that way. So if you're upset about that, I certainly feel your pain. I disagree with how it came out, but this is what we have to work with right now.
If you're upset, call Megan Mortimer, and don't call Megan. Don't call Megan. Please don't call Megan. Or call Megan. All right. What no, she's cursing me with it. She's muted right now. No, I'm just kidding. The bottom line is the other thing, Jim, is that what if somebody applied for forgiveness before December 27th, before this law came out? That's not really fair. See, that's what I thought they were going to do. I thought they were going to say anybody who filed for forgiveness either before December 27th or after, before the date of enactment of the law, maybe when it was, as of the date of this notice, gets a mulligan. Well, They didn't do that. So if you filed, so let's go to the, let's see. So example 3 in this, just to kind of keep going on the point here, you had a loan of $200,000, you paid $200,000 in payroll costs, and you paid $70,000 in non-payroll costs. And the borrower reported the $200,000, didn't put down the $70,000. Well, it's the same thing. They will only get, the $200,000 is considered used for PPP and not the ERTC. Next slide, Amanda. So basically, the employer C here cannot reduce the deemed election by the eligible expenses, even though you spent the 70 grand because you didn't put it on the application, right, Jim?
That's correct.
Yeah, because you didn't put it in the application. What we would have done is we would have said 130,000 in payroll costs, 70,000 for eligible expenses other than payroll costs, And then that would have opened up that additional money to be able to use it. So the lesson learned here is that by excluding non-payroll expenses from your PPP forgiveness application, you're going to lose dollars. That 50% of that is an ERTC credit, right?
Yep.
And the example number, no, go ahead.
Just keep in mind, in this case, they're still using more payroll than they actually need, because really with 200K of a PPP loan, you only need 60% of payroll. So it could have been as low as 120,000, but
Yeah.
again, in this example, they used 130 and 70.
Right. So let's go to the next slide, because we got a lot of questions. I want to make sure we get to them, and we'll just save them towards the end. So for those of you who file for PPP forgiveness, my best advice to you would be to call your CPA. If your CPA says, I don't know what an ERTC is, give us a call, because we do, and we can help you with this. And basically, if you file for forgiveness, send your application, and let's we'll look at notice 2021-20, and we'll see what it looks like for you, and we'll see what we can do to help. Okay, if you have not filed for forgiveness, which is the vast majority of you, now we're getting to the meat of this. Okay, so remember the following. Number one, you only need 60% of your PPP loan to qualify for the full forgiveness. So using any more than 60%, Jim, we can use that. Anything more than that that's paid in the second and third quarter, we can use that for the ERTC, right?
That's correct.
And basically that language that we showed earlier that you and I read 14 times, threw up over, and didn't understand what it said. What it basically says is, if we haven't filed for forgiveness, we can basically do anything we want with the wages. I have a comprehensive example of how this is going to work a little later, so it'll bring it all home for you.
Yep.
So remember, the payroll costs are not just W-2 wages, right, Jim? I can use other things to get to the 60%.
That's correct.
How does that work?
Well, now you're getting into the PPP area, and Megan would
well,
probably be.
okay. Well, I can jump in. I'm sorry. The way this works is we got any pre-tax employee contributions for health insurance or fringe benefits, excluding taxable Medicare and wages. Basically, part of the, so let's say I get a $150,000 loan. I need $90,000 to get to my 60%, right, Megan? So I can use W-2 wages. And by the way, I cannot use any wages that I'm going to get a credit on for the sick pay or the FFCRA stuff. I can use my health, life, disability, vision, and dental insurance contributions. Anything that you funded during the covered period for your employer retirement contributions for your employees, and your employer state and local taxes that you paid on wages, not the federal employer taxes, just the state. So if we need $90,000, maybe you only need $80,000, because maybe you paid $10,000 in a retirement contribution and in health insurance and things like that. So that's real important, 60%. And that's why the other 40% is so important. So next slide. So there's a lot of stuff on this page. So basically you got two periods you got to consider. I just want you to have the big picture here. Jim, we got a 24-week period, which is the PPP loan covered period.
Yep. And
in the middle of that is pretty much the second and third quarters, which is April 1 till September 30th. So most of you are going to have the vast majority of your period for the ERTC is going to be in the middle of your covered period. Okay, we want you to use the wages paid during the covered period. So let's think about this. Okay, the second quarter starts April 1st, right? Okay, but you didn't get your PPP loans probably until May 15th. So for the period from April 1st till May 15th, none of those wages are going to qualify for PPP forgiveness, right, Jim?
That's correct.
So I'm going to use those wages. I'm going to bifurcate. That's a big word for me. You understand? Bifurcate for a CPA. Bifurcate. It's 3 syllables. I'm going to bifurcate those wages between April 1st and May 15th when I got my PPP loan. and I'm going to use those specifically to push to get to my $10,000, right?
Yep.
Now, what if I got my loan and my covered period ends after September 30th, Jim?
Well, that's not a bad answer, because then we want to push as much PPP forgiveness payroll out of Q3.
Right.
So if we can push that into Q4, that's a good answer for us.
Right. Now, Jim, you and I had this conversation. In fact, you brought it up in our firm chat about this. There was the legislation at first seemed to indicate that 50% or more owners could not participate in the ERTC. However, in a strict reading of this, I believe that you may have a different opinion.
That's a great question, Art. And so really where we're shaking out as a firm is, yes, the owners can qualify. So if you own greater than 50% of your practice, you can take your W-2 box 3 wages for the ERTC. Any income subject to self-employment tax is, of course, not includable. And if you pay any family members, they're also not includable. And that's basically anyone you're related to is kind of how that reads. But, the firms have been a little bit split on this. If you take, in my opinion, an incorrect reading of that question, you could get to the answer that, gosh, an owner doesn't qualify. But to me, that's an incorrect reading of it. And other firms feel that way as well. So that's kind of how we shake out right now. I thought we might get more guidance on it, but they punted on that one.
Well, at the moment, and you know what, we've looked at it, it's what, 280C, or is that the one I've got in my mind? So yeah, we're required by law as CPAs to speak Internal Revenue Code sections. So that's where it is. But see, this is why, guys, it's so important to, if we're limiting the payroll cost to 60% on the PPP application, it's so important to have that 40% to use so that we get the full forgiveness. Okay, let's go to the next slide. All right, so if you don't have at least 40% of the PPP loan amounts paid in your eligible non-payroll costs, you're going to have to borrow from your payroll costs. Okay, you're going to have to use more than 60%, because what you don't want to do is limit yourself, Jim, to 60% on your application, but then I only have 25% of non-payroll costs, and they're not going to give me full forgiveness.
Yeah.
And you're probably, yeah, so we'll show you that in the example. So here's a question that I had, is interaction between PP. So if we use PPE expenses for the 40%, I don't remember, and I don't know if you saw anything on this, is if you claim those expenses for HHS provider relief, does that cause a problem here, or do we not know yet? We
don't know yet. We're still, HHS provider relief funds are a little bit of an unknown right now. So we're waiting on some guidance.
Yeah, there you go again, talking about that guidance thing you keep waiting for. It's like waiting for a bus. So if you use exactly 60% for payroll costs on the forgiveness application, I'd be a little careful about that, because it leaves you no room. What if the bank goes in and looks at your documents and says, oh, no, well, you included a payroll cost that's out of the covered period. So now you're down to 50%, and basically you don't get full forgiveness. So we want to, if we can at all help it, we don't want to be right on the 60% number. If you've got extra payroll costs that you're not using for ERTC, put it on your application. So, and in caps right here, the end game is to use as little in payroll costs to obtain the forgiveness, and to use the remaining wages and group health costs to maximize the ERTC. And like I said, if you have more wages than 60% and you have enough in wages to maximize ERTC, put it on the forgiveness and we win all the way around, right, Jim?
Yep, that's correct.
Okay, so let's go to the next example. So here we go. Now, I picked this, the dentist here out of thin air. So Dr. Donovan, who owns and operates a dental practice called Hawkeye Dental in Iowa City, Iowa. Jim, do you know anybody like that?
No, not at all.
I didn't think so. So Jim is a proud Iowa Hawkeye, right?
I am.
You are, and we won't talk about what happened in the in the
Holiday
bowl
Bowl.
game at the end of 2019 in San Diego, which I happened to be at, but I will still be your friend, and you and I will still golf when you come to California. But
Absolutely.
anyway, so Dr. Donovan, who owns and operates a dental practice called Hawkeye Dental, this example will drive home how we look at this. So he received a $150,000 PPP loan on May 15th of 2020, which is, and his covered period ends on October 30th of 2020. He closed his dental offices except for emergency procedures on March 15th and reopened on May 15th. He had a 60% reduction in gross receipts for the second quarter of 2020. So he's going to qualify for Q2 and Q3. He doesn't qualify for Q4. He paid his average, he had 15 employees. He paid $50,000 a month in wages, which we're assuming can also include the owner, right?
That's correct.
And there's no limitation on the owner. $10,000 for the owner, $10,000 for the spouse. If the spouse is on there, there are other relatives that are excluded, right?
That's correct. Great point.
Okay. So basically, during the time that we were closed for emergencies, we were only paying salaries of $15,000 a month. And again, remember, folks, I made this example up myself. It took me about 3 hours to play with all the numbers so that they made sense. Okay, so non-payroll costs were $40,000 during the entire 24-week covered period. Rent maybe was, $5,000 a month, utilities, etc. And then Dr. Donovan basically has not filed for PPP forgiveness yet. So let's go to the next slide. So what do we need to do? So Dr. Donovan, you bring to Eide Bailly your application and all your stuff. So we got a $150,000 loan. We need $90,000 for payroll costs, right?
Yep.
And we need $60,000 for non-payroll costs. We need $10,000 of wages per employee to maximize the credit, right?
That's correct.
So Jim, if I have 15 employees, what's the maximum? What do we get if we hit the bonus round here? What's the maximum amount of an ERTC we can get?
So 15 employees times $5,000 is $75,000.
Folks, that buys lunch. So that's a lot of money. We only have $40,000 in non-payroll costs. So we need to borrow $20,000 from our wages because we don't want to put down $60,000 in payroll costs and only $40,000 in non-payroll costs, because that's 100, and that's not going to get us to where we need to be. Okay. So basically, let's say we needed 60,000. I'm sorry, of non-payroll costs. We only spent 40, so we got to borrow 20 from the wages, which we can do. We can basically bifurcate payroll between the PPP and the ERTC any way we want.
Yep.
So we can use payroll costs from, like Jim and I were talking earlier, from October 1 to October 30th comes to $50,000 of wages we paid. I don't need to use that for ERTC, Jim, right?
That's correct.
Okay.
We don't qualify for that quarter.
Right. Okay. And then 40,000. So we only need 40,000 of wages to get PPP. Then I give you the example of how the wages were paid. So let's go to the next example. Next slide. So basically, here's how this works. All right. So I'm gonna bifurcate the wages to, at this point, I'm gonna use the April 1st to May 15th for ERTC. I'm going to take the rest of the wages to get me to the 150,000. So at the end of the day, I've got 150,000 for ERTC. I've got 147.5 in total wages for PPP, and all I needed was 90. So Jim, I'm golden, right?
You are good to go.
I am good to go. So we needed 110 in payroll costs, not 90, because we only had 40 of non-payroll costs. So this is the thinking. And guys, this is a very simplified example, because when we start looking at this, we got to look at every one of your employees. We got to look at, did they have sick pay? Did they have anything else? When were these wages paid? What are your expenses that are going to qualify for the non-payroll costs? How much was your PPP? So there's all these things. This is an oversimplified example. Let's go to the next slide, please. So not only, so to put a bow on, and that's for 2020. And this notice, Jim, was only for 2020.
That's
Okay.
correct. Yeah. Now I'm thinking that, 2021 is going to be very similar, but they were very clear that this notice is for 2020.
Right, but for 2021, wait, there's more. They changed the rules a little bit for 2021, didn't they, Jim?
They absolutely did. They made it easier to qualify with the gross receipts test.
Right. So how does that work?
So in 2020, remember we have the greater than 50% decline in gross receipts that we have to look at. Congress said, gosh, that's a pretty high hurdle. So in 2021, we only need a greater than 20% drop in gross receipts to qualify in the same quarter versus 2019. So we're still looking at what we're calling a more normal year, right? 2019. And, versus 2021. There's also a unique provision they put in there that's the look back quarter. So for example, for Q1 of 2021, you can look at Q1 versus Q1 of 21 versus Q1 of 2019. Do you meet that greater than 20% drop? Then you qualify for the quarter. Let's say Q1 of 21 is actually not bad. You can look back at Q4. So there's a 1 quarter look back. And you say, okay, how'd I do in Q4 2020 versus Q4 of 2019? And if you meet that greater than 20% drop in that period, you automatically qualify for Q1 of 2021. And then those same rules apply for Q2.
And the credit has been beefed up, because instead of it being $5,000 for the entire year, like it was for 2020, it's now 70% of 10,000 or 7,000 per quarter. And I believe in the bill that the House passed and that President Biden is going to sign, as Megan told us on Friday, that they have expanded that to Q3 and Q4, right, Megan?
Yes, sir.
Oh, okay. Wow. That's good news.
Yeah, so 28,000 for the entire year, assuming you qualify for all quarters. It's a pretty good deal.
So if you have 10 employees and they qualify in each of the 4 quarters for whatever reason, and I hope they don't, because I want you to make money, but that's $70,000 a quarter, $280,000. Now, the one thing that we do need to tell you is that you can't double dip here, right, Jim? You can't.
That's correct.
Yeah. Now, so here's another reason, one of many, why you should be extending your tax returns this year. And by the way, folks, we have clients, Jim has clients, Eide Bailey has clients, every CPA has clients who believe that if you extend your tax return, you're going to jail. I will tell you, in the spirit of full transparency, that I have been filing tax returns for approximately 45 years, and I have never filed on April 15th. Never, ever, ever, that I can remember. Okay? So what does that tell you? You don't have a less chance of being audited. I mean, there's all these myths. The bottom line is that if you don't extend, because of the California rule, and because of the fact that we CPAs are not going to do this work until after April 15th, because you might have heard there's a tax season. You're going to have to file an amended return, which means that you might have to, you might get money, but there's a fee to that we would charge, or your CPA would charge. So that's another reason to extend your tax return. So let's go to the next slide. The other thing, for if anybody on here has a DSO, multiple offices, maybe you have a spouse or another business that has lots of employees. Jim, they increased the number of employees that qualify for the full ERTC, right?
That's correct. They moved that number from 100 to 500. So now if you're 500 or fewer full-time employees, you can take the ERTC on everybody. You don't have to meet that test about, being paid but not providing services.
Yep. And we will be receiving guidance on the credit in 2021. As noticed, 2020 it should be 2021-20. I'm sorry. Says it's coming soon. I'll probably win the Masters golf tournament, Jim, before that guidance comes, but who knows? We'll see. And by the way, if you have an in to play at Augusta, you better call. We'll go from there. Next slide. So how do you do this? How do you claim it? You're going to probably file, Jim, an amended 941 for the second and third quarters, right?
Yep, that's correct.
And go ahead.
I was just going to say, so you normally file your quarterly 941s, right? So Q2 is due at the end of July, Q3 is due at the end of October. So you actually go back and you amend these returns to claim your credit. Now, in this case, because you paid your taxes timely, you're just going to get a refund. And so the credit is 100% refundable. So even if your tax liability wasn't that great in that quarter, you're going to get the entire amount back. And I've seen clients, they've sent me checks or pictures of checks. So it's certainly happening.
It's real. Now, again, I want to reiterate that let's say that you get, in my example for 2020, you have 10 employees, you get a $50,000 ERTC. You are, as of this moment, supposed to add $50,000 back to your income because you don't get the deduction for the wages. We are, and Megan, I'll jump on here for a second again. I think one of the things that we at ADCPA were talking about was trying to talk Treasury into letting us go ahead and take that that reduction in wage expense in 2021. You said you were going to talk to somebody at Treasury, or we're bringing that to Treasury. Anything?
Yeah, I'm bringing it to Treasury later this week. We were waiting for the rescue plan to pass so that if there were any additional questions that came out as a result of the legislation, I'm just giving them one large email from me. I'm sure we're not the only ones asking this question, but they always like to hear from small businesses that are also healthcare providers, because that's sweet spot of really a population they want to take care of.
Right. So again, another reason, folks, that, if you file your returns now and you go back and you get the credit, you're going to get the credit on a separate form, but you're going to pay additional income tax, interest, and penalties. I don't think there's a waiver of interest and penalties when I have to go back and amend these returns, Jim, right?
No.
Or is there?
Well,
we'll see.
Yeah, as I say, we'll see.
We'll see. Right.
Yeah.
Okay. Next slide. And we have time. We'll get to all your questions. So again, here's my slide. Do I get to deduct the wages used to take the ERTC? No, can't double dip, but it looks like you have to do it in 2020. Another reason to file for an extension. So again, for those of you who have not filed your partnership or S Corp return, which are due on Monday, I never say you should file for an extension. You should seriously consider talking to your CPA and looking at doing that. C corporations and sole proprietors who are going to apply, qualify for this, your tax returns are due April 15th, so you probably haven't filed them yet. Again, I will tell you, it is, as Megan said, please be kind to your CPA month. We'll talk about that in a second here. So next slide. So that's basically how it works, guys. What records do you need to keep? Can you just do this and throw your records away and say, oh, the government's giving out free money, don't worry about it? I don't think so, Jim. So there's a lot of things you got to keep. And this is question number 70. You got to show them the government order. Jim, you've been to the IRS to represent a client once or twice in your career?
Just a few times, yes.
They don't mess around. I mean, it's like they want to see documentation, and if they don't get it, they're disallowing your expense, right?
Everything is by the book with them. Show me exactly what I'm asking for.
Right. So you got to keep your records to show that you have the decline of 50% gross receipts, which employees receive qualified wages and what amounts. Large employers have a lot more they have to keep track of. How the employer determined the amount of the healthcare costs, Let's see, that, you know, that the employment tax returns. So the bottom line is you need to keep documentation, and so let's go to the next slide. So this is where I'll kind of tell you how we do this, folks, and this is the kind of be kind to your CPA month. We CPAs have, you know, we signed up for this, right, Jim? We decided we want to be a CPA. I should have gone into broadcasting, but I went and got my CPA license, as did you. And basically, our busy season right now is February 15th to April 15th. And when people ask you how many hours do you work, what's your answer?
Way too many.
Yeah, or whatever it takes.
Yeah.
Well, what the government has done is they have basically created a new little cottage industry for the CPA profession, which is basically helping clients with HHS, ERTC, and PPP. It has become a full-time job. Jim, we have a champions team at Eide Bailly that does PPP and specifically ERTC. You and I are talking, we're developing a specific, unbelievably sophisticated spreadsheet that we are going to use for our clients to help them and to create the documentation of all this. So if you're a current Eide Bailly client, I know there's a lot of you that are on this call who are. We'll be sending out an intake form in the near future to you to get the information and to determine eligibility and give you a fee quote and stuff like that. And if you are not a current client of Eide Bailly's dental division and you would like us to help you to obtain as much ERTC and as much PPP forgiveness as we can, send me an email, and we'll leave this up here for a little bit, awiederman@eidebailly.com, and we'll put you on the list. Between now and April 15th, we're kind of, it's kind of for this consulting, Jim, it's kind of the preseason. It's kind of spring training. We're kind of training up, we're getting ready, we're getting all of our house in order. And then once the rest of our team at Eide Bailly is done with taxes, we're jumping into this because we got about 3 to 4 months to get this done.
Yep.
I will tell you folks, and many of you have heard me on many webinars. I don't sell myself, my firm. I don't make a commercial announcement. This is the closest to one that you're going to get here. We are aware of companies, Jim, that are charging 30, 33, 35% of the tax savings.
Yes.
We have come up with a fee structure, Jim, that's significantly lower than that. I think it's about half or less, maybe.
Yeah, absolutely.
So if we can be of assistance to you, we can get your records, we can download stuff from your payroll service, we can help you file for forgiveness, we can help you do the amended returns, and we would be honored to do so if we can help you with that. And we'll be probably doing this right after the 15th of April. Next slide. I think that is it.
Well, and just two notes there, Art.
Go ahead.
Some of the payroll companies are offering to do this. Some are offering to do it for free. We've asked questions because we, of course, have to put that add back on the income tax return, right? And they're like, oh, we didn't keep any documentation. We told the client they need to keep everything. We're just doing this calculation. The client asked us to look at it and it was way off. So be careful if you go that route. Just make sure you talk to your CPA about it. The second thing you mentioned, Art, is that 3 to 4 month window, right? And that's really for PPP forgiveness for round one. And just know that we have a statute of limitations on this. Well, under normal, tax return rules, it's 3 years. It looks like in the new law that that passed today, they're going to extend the statute of limitations on ERTC to 5 years. So I don't know if that's to allow individuals to take advantage of the credit for longer or to give the IRS more time to look at it. We'll find out that answer at some point, right?
All right, Jim, let's get to questions. I'm gonna, you can pull them up as well as I can, right, on your screen?
Yeah, absolutely.
All right, so let's start off with, what about those of us that have started the PPP loan forgiveness to comply with the timeline previously? Okay, Megan, you answered that one, I think it looks like.
No, I was going to just answer it live since we only
Go
had
ahead.
a dozen. unless you decided to opt for the 8-week period for whatever reason, you still have plenty of time to file for forgiveness. You may still be thinking that you have to do it with the 8-week period, but the covered period for 24 weeks plus the 10-month period, you should still have at least a few months before you have to start filing for forgiveness. So we do still continue to recommend that you extend that if you can, or pause that if you can, and work with your CPA to see if you can also really take advantage of the ERTC at the same time.
Okay, is there a plan for PPP round 2 forgiveness?
I mean, yes, we'll see guidance, but like we said previously, it likely is going to be 99% the same as it is for PPP1 in terms of the process. The forgiveness applications are already up for the first draw loan, as people have already indicated, because they've been utilizing them. But I mean, I can't imagine any specific changes other than having to show the 25% reduction, which you don't necessarily have to do in the PPP first draw.
Right. And we won't have the advantage of the June 5th law that said because of anything from CDC, HHS, or OSHA, that social distancing and stuff, we probably won't have that it's gonna, that can't return to the same level of revenues. They're gonna have to tell us something about how that's gonna work. So we'll see. Let's see, next one. I just received an email from my PPP2 lender that is allowing use of gross income minus some things to establish loan amount as opposed to net income.
Is it, it must be a sole prop or independent contractor?
Yeah, I don't know, but the bottom line is there's a January 19th promulgation from the SBA that tells you exactly how to do the calculations, and the March 1 rule that came out for sole proprietors tells you can use gross receipts. So it's the lender doesn't, there's no 2 ways to do it. It's a specific calculation, right? Not really sure of the question here. Can you amend the PPP1 loan amount? I didn't include my income in calculation.
You can, right? You can go back and amend with, they have now new forms to be able to amend your PPP1 if you can have discovered that you can now claim more. Yes, and I just put in the link to the second draw loan question for the previous question for PPP2 lender, but I will now also include a link to the lender rules are easier for them to be able to figure out how to recalculate things for the borrower.
Which banks or lenders are accepting PP2 calculations using gross income? Well, remember, guys, this just came out, so one would hope, and this is the problem we have. We've got a deadline of March 31st, and we've got all these banks that have to recalculate their software, right, to calculate these loans. So I don't, you'd have to check. I would check with the lender you used for PPP1, see if they do it. There's over 5,000 lenders. I don't know how many of them have fixed their software for this new Schedule C rule. Have you heard anything, Megan?
No, I mean, again, if your lender doesn't do, I mean, SBA, there's thousands of lenders that will do this. So I'll put a link in there to the SBA search so that you could look in your local area for all the lenders that are doing this. So if you go to one lender and they're like, we can't do PPP2 for a sole prop or independent contractor right now, we don't have time, you have thousands of others to choose from.
Okay. Regarding ERTC for 2021, my wife has been previously unpaid office manager for years. If I put her on payroll for 2021, would this qualify for the tax credit? In the first quarter of 2021, is it worth doing considering payroll taxes, EDD, and all the paperwork? That's a great question, Jim.
It is a great question, and
well, it's $5,000.
Yeah. Well,
no,
it's 2021,
sorry,
so it's 7,000, right?
So,
the question is if you can get her paid 10,000 by the end of Q1, right?
Right, and yeah,
you got to make sure that you qualify too. If you make sure you meet the test to qualify for Q1.
Well, and you also have to justify that she has a business purpose in your business, because they're going to ask about that too. But yeah, I mean, there's no reason that you can't do that. And put her on the payroll. The payroll taxes. So let's say that doctor, you paid your wife $10,000 in the first quarter. You're going to be paying $1,500 in payroll taxes. but you're going to get a credit of $7,000. That's a pretty good deal, huh? So might not be a bad idea. My lender gave me an option to update my loan application to use either the net or gross income calculation. Have 72, I heard something, have 72 hours from yesterday to decide. Well, you want to get the maximum amount. Why they're telling you you have 72 hours to decide, they shouldn't be telling you that. It's only March 10th. If they're giving you a problem, go get another lender, right?
Yeah, so use your gross because you want to get the most you can. But yes, lenders shouldn't be giving you arbitrary rules. That's not the intent of SBA or Treasury with these people. I've had to, I shouldn't say these people, because there's lots of great lenders out there. You know, we worked with Dan Bywater, a lot of great people, but there are a lot of lenders that are requiring overburdensome documentation. They're giving you arbitrary deadlines that they've come up with. If you want to keep using that lender, fine. But I mean, they can kind of make up their own rules as they go along until we report them to SBA, and then they get in trouble. And then it's this whole big thing, which we've had to do a few times for some not great lenders. So yeah, I mean, you could decide if you want to continue to work with a lender who's giving you a 72-hour deadline that is not anywhere in statute.
No, yeah, don't do that. I got 54% reduction. That's the question. Our suppliers could not supply our N95s for us to work. Could they? Is that shut down? Well, if they were shut down and the government said you cannot manufacture N95s or you cannot be in business, then yes, Jim, that qualifies, right?
Well, yeah. So, well, and really, I think the question goes to, gosh, if you can't get it, is that enough to be qualified? And, you know, I think it's a little bit gray, right? You know, if you try and apply that supplier fact pattern, but, you know, I think you could make an argument that, yeah, if we can't get material to do our job, then we're shut down. Well,
and again, remember, folks, that the period of your shutdown isn't going to be 6 months like for the 50% reduction. It's only going to be 8 to 12 weeks. And it's more than likely that maybe during that time you didn't pay too much in wages anyway. So is it worth it? Okay, let's see. Our suppliers, I saw something else. Okay. California government did take all the available PPE products and did not allow us to have them. Yep. I remember that. So we're going to have to look further into that, Jim and Megan. I think it's a gray area.
Yeah.
You know, do retirement plans qualify for ERTC to receive the $10,000? No, the retirement plans are just for purposes of PPP. If I got my head hurts already. So for purposes of wages for ERTC, it's basically wages and group health insurance, right, Jim?
Yeah, it's what's in box 3, so subject to Social Security tax, and I don't recall off the top of my head what all flows in there, but yeah, but that's the number you need to pull.
Yeah, but no, retirement plan contributions do not count as gross wages towards the 10,000. I'm pretty certain of that.
Okay.
Are the wages counted when paid or when worked?
Great question. So the law is actually pretty plain. It says when they are paid. So.
Okay, there you go. Is the webinar going to be available? Yes. Amanda, when is everybody going to be able to get this webinar on this webinar will live on our YouTube channel?
Yep.
So
yeah, it goes on our YouTube channel. Given the length, it should be live by Friday.
Okay. And can you put up, Amanda, the link to get to our YouTube channel?
Uh-huh.
And by the way, that's not only got this one, it's got my podcast. It's got all of the wonderful webinars that Eid Bailey does. Jim is not getting away easy. He's doing one tomorrow with Adam on the same subject. Okay, let's see. Do I have a sense of how many dentists applied for PPP and ERTC? Megan, did you get any? No, well, I'm assuming virtually nobody's applied for ERTC yet because this is so new.
90% of dentists applied for and received PPP Draw 1 loans, and our current stats show us at about 54% of PPP second draw loans.
Okay. I heard that they moved the tax filing deadline from April 15th till July 15th. My late mother used to have a saying, from your mouth to God's ears. No, not yet. The many members of the House, Megan, have written letters to IRS, to
Yeah, I
Commissioner
mean, the
Reddick.
House, we have a bunch of stakeholders, yes, but it still hasn't been extended, hopefully soon. Art, there's a couple of questions that you did miss. One is this, did you say
I'm
that
sorry.
employee, did you say, you missed a couple of questions in the queue.
Oh.
One is, did you say that employees who are relatives are not eligible for ERTC? Jim?
That's correct. So if you're a greater than 50% owner, anyone you employ, basically mother, sister, daughter, son, mother-in-law, father-in-law, if you're a relative, you're out.
And then the other one is the charge for ERTC, a percentage of credit or a flat fee. I imagine that's a business question for Eide Bailey in terms of processing, correct? So you
Jim,
guys-
we have a fee schedule, and it's based on the amount of time we plan on spending the work. It is not a percentage of your tax savings. That is,
Under Circular 230, we're not allowed to do.
we're
a
not allowed to
contingent
do that.
fee.
Yeah, yeah. CPAs can get in big trouble by charging contingent fees. Like, for example, if anybody ever tells you, well, I'll just I'm going to get you a great tax refund, and you can pay me 40% of the refund because it's going to be so much better. That is very, very bad things will happen to us if we ever even think about that. Yeah. So yes, Circular 230, you're absolutely right. How does this pertain to those of us who are not business owners but associates?
Unfortunately, it does not, other than, so we are working on other things for associate and employee dentists, a lot of student loan stuff, some additional tax break stuff, but PPP and ERTC do not directly benefit associate dentists, other than they were probably rehired faster than they may have been, or paid wages during a period of time during shutdown because of PPP. But unfortunately, there's no direct benefit to associate or employee dentists.
Right. Sole prop, that's not really a question. If you started business in 2020, can you still apply for PPP round 2?
Only if your business was open by February 15th. And
Yeah.
even then, the period of time in which you were open, your payroll amounts will probably be relative. If you started January 1st, 2020 to February 15th, it's decent, your payroll amount that you'll be able to get. But we are trying to work hard to allow PPP to be available to startup businesses for 2020.
Assuming your PPP was lower amount than it could have been due to improper documentation. Forgiveness application. Yeah, we'd have to look at that. I don't know if this is one that we can do on. PPP loan was 75,000. Payroll was 150. Overlap with the second, third quarters. The payroll allows for full forgiveness. Yeah, this is why we have these intricate spreadsheets, because we really can't do this stuff in our heads.
Yeah.
Like I said, the example I came up with literally took me 3 hours to play with numbers, make sure I was doing it right and everything. So that's something that we just have to engage on. What qualifies for a PPP forgiveness for a sole proprietor? My wife is paid as a management company 1099. So what qualifies for a PPP for? I mean, it's basically you get $20,833 if you made $100,000. And I don't think you have to write draw checks to yourself. I think just by function of being a sole proprietor, you pretty much qualify if you had, because you don't pay yourself wages. So as long as you qualify for that, you should get forgiveness for that. I don't think there's any way to get around that. Can 20% drop in revenue in Q1 of 2021 be compared to Q1 of 2019? It is compared.
Has to be compared to 2019.
Right. Or you can compare Q4 of 2020 to Q4 of 2019.
Yep.
And for the second quarter of 2021, you can compare Q1 of 2021 to Q1 of 2019.
Yep.
Oh God, I need Megan. Alaska's looking good now. Oh my gosh. I applied for a PPP2 loan with the same lender and inadvertently used incorrect calculations and was declared ineligible. Can I reapply with the correct calculations if there's a 25%?
I don't
I
know
don't-
about remember we had this issue with PPP1 draw loans with incorrect calculations and they came out and corrected. I don't know on this question if you can reapply if you've already been outrightly rejected by SBA, although it should have been the lender that rejected you.
So I had a client that submitted with a bank and they rejected them because of that 35 or $45,000 limit. And we were able to reapply. I would just talk to my lender.
Yeah, talk to your lender, and if your lender is being weird about it, go to a different lender. Make sure that they know on the up and up that you've already applied with a previous lender and they rejected you because of a miscalculation. That's what I would do.
Yeah. Should I reapply with another lender if my current lender has not replied to my request to amend an application to include gross income? I have not been approved for the loan. Also, can I include my medical insurance in the calculations if I do not provide? Yeah, I think the answer to that is, I don't think the answer is yes to including the medical insurance, but I would absolutely go talk to another lender if your lender is not being cooperative. Remember, this is a big imposition on these banks. And if you think we're having trouble understanding these rules, and we understand them as well as anybody in the country, imagine these bankers who don't understand these rules. So we're getting all kinds of answers, Megan, from bankers that are not right?
Yeah, and I have to keep resending them the guidance, and I hate
Yeah.
doing that because I'm like, you guys should know, but unfortunately, not everybody and not every lender is equipped with someone who can read regs and interpret them well.
Yeah. The next question, the last question about wife as an employee, are you saying spouses qualify?
That's
have to
our
be-
reading of the law. Spouses qualify.
Megan, we have to make sure that the answer to this particular gentleman is correct, right? Anyway, have an S Corp, have my wife office manager on unemployment since May of 2020. As the previous question, would be wise to get her back on payroll. If you're going to have a 20% reduction, it might be. I don't know if there's any guidance that says you can't do that.
I don't.
No,
there's
I,
a- no.
Yeah,
I haven't seen any.
If you qualify in Q1 of 2021, you get Q2 as well. Yes, they haven't come out with those rules yet. That's right, because
agreed.
that's right, because
For
in
2020,
for 2020, it was
We
80,
know.
it was 50%, and then it's now down to 80%. We don't know yet. Okay.
Well, but and so Nolan asked a great question, right? So if you hit the Q1 numbers, you go to Q2 and you have the look back period.
Yeah.
You know, I just don't know if the IRS will come out and say, well, you didn't use the look back period for Q1, so you can't use it for Q2. I don't want to speculate, so
I
we'll
don't know.
see.
Jim, I don't know what the firm policy is on slides for these types of, what do we do with slides? Do we share them? Are they on our web? How does that work?
That's a great question. Amanda would probably be a better person to ask on that.
Amanda, do you know how that works?
I don't, I'm sorry, but I can ask. I'll figure
Yeah,
it
we'll
out.
find out. Yeah, we'll find out. Okay, and then, but to be clear, since it's my wife, would she not? Yeah, it seems like the wives qualify. So, all right, folks, I wanna thank Jim and Megan, who are both up way past their bedtimes. Thank you so much, both of you guys, for all you're doing to help our dentists. Jim, thank you for all you've done to help me in understanding all this stuff. I really appreciate it. Folks, just remember, next week, a week from tonight, the 17th, please come on if you're doing things like buying practices. Kathleen Johnson's going to talk about that, buying practices and what you need to look at. If you are interested in having us help you with this, as well as the research and development tax credit, which we didn't get to that.
Yeah.
Folks, if you are looking and you do research in your practice, Jim is the head of our R&D group. If you're interested and you think you do different procedures, prosthodontists are great for this. Dentists with extended training are great for this. Send me an email. We'll get you connected with Jim and his group. And if you want to do the consulting for the PPP and the ERTC, we're here to help you. Again, folks, dentistry is thriving. Believe it or not, we're doing great, Megan. The profession has come through this horrible one-year pandemic better than most. And God bless every single one of you for what you've done to help your patients and getting through all this. The American Dental Association is here to help you. Bailey's here to help you. The ADCPA is here to help you. We're all here to help you. If you need our help, give us a call. Thank you so much for attending tonight. We'll see you next week. And I'll use my last, like I do in all my 5 words, is failure is not an option, folks. We're going to get through this, and we're seeing the end of the tunnel here. So, Jim, thank you so much. Megan, thank you so much. Go back to your dental practices in Iowa and Washington and get to work tomorrow. All right.
Will
Thank
do.
you, Art.
All right, guys,
Thank you,
have a
Megan.
wonderful evening. Thank you so much for your time. Good night.
Good night.